And welcome back. And after a little summer holiday break, we're back giving you the major news stories that have affected the market so far. And what are we going to look at this week? Well, we're going to start with the S&P, and that's approaching those historic highs once again. We'll take a little bit of a look at the major European currencies, how they're faring against the US dollar currently. Then we'll take a look at Brent crude oil and see what's been happening there. And we'll finish off with quite obviously a major story, really, about gold hitting some brand new historic highs. So let's take a look at the S&P 500 to start with. Now, we are approaching those historic highs once again. On the 2nd of August, we posted some analysis on the USPX 500 mini, which is our equivalent of the S&P 500 contract. And we said on the chart that we construct an ascending channel, A to B, with a median line shown as a dotted line. And within that chart, we highlighted the risk of a bearish breakout, as indicated by the red arrow. Now, since then, the price has dropped by more than 5% to the August the 5th low, doubling the width of the AB channel towards point C. The B line became the median line of a much wider channel. Now, the index's decline was driven predominantly by recession fears based on US labour market data. However, the price began to recover from the lower boundary of the wider channel, indicating the recession fears had subsided somewhat and potentially the rally continues. Now, the price has now returned close to those historic highs, as I've already mentioned. Wednesday of this week saw the minutes from the FOMC meeting at the end of July released, revealing that the vast majority of participants noted that if data continues to align with expectations, it may be appropriate to ease policy at the next meeting, that September meeting effectively. And to be fair, the market is now pretty much expecting a cut. The price of the US SPX 500 at FXOpen remained largely unchanged on this news, indicating market participants believe that the interest rate is highly likely to be cut, and that could well stimulate economic growth, company performance and stock indices. Take a look at the chart from today. What does that show us? Well, the 7th to the 8th of August, bears attempted to resume the downward trend but failed. In mid-August, price action made the purple lines you can see quite relevant, those trend lines in purple. The 15th of August, the B line was confidently broken. You can see that with the blue arrow. And that dotted line now showing some signs of resistance. Now, it may be fair to assume the bulls are back in control after that sharp decline. And if sentiment remains unchanged, we could well see attempts at a new historic high in the coming days and weeks. And now, time to turn our attention towards currencies, and in particular to the larger European currencies, and they've strengthened against the dollar ahead of the Jackson Hole Symposium. Release of revised US employment data and the FOMC minutes that have come out have added downward pressure on the US dollar. In fact, those updated figures show that in March there were 818,000 fewer non-farm jobs than initially reported, suggesting the US labour market continues to slow down. Now, that may lead, according to some market analysts, to the Fed cutting rates by 0.5% instead of the expected 0.25% at the next meeting. On that, we'll just have to wait and see, obviously. Now, given the current situation, traders are going to be closely watching the annual Jackson Hole Symposium, and in particular they'll be looking at Jerome Powell's comments on the state of the US economy. On top of that, this week we've also got some important data out for the UK and for Europe. So let's have a look at the euro dollar. Now, the chart and tech analysis suggests the potential for further price strengthening, supported by a strong bullish impulse on the daily time frame. That comes after a series of buy setups. And on Wednesday, the price broke through a key resistance level at 1.1100. And if this level now becomes support, the price may continue its rise towards last year's highs at around the 1.1270 down to 1.1240 levels. Now, in the event of a downward correction, we could well test the 1.1100 level down to 1.1070. Key events are going to be drivers, and what have we got coming out? Well, Thursday, 10:30 GMT +3, German manufacturing PMI. Again, Thursday, 11 o'clock GMT +3, the Eurozone manufacturing PMI figures are released. And again, Thursday, that's 2:30 GMT plus 3, we have the ECB monthly policy meeting minutes. Got to look out for these figures. They could well drive the market one way or the other. Lastly, we take a quick look at cable. That's the Great British Pound against the US dollar. And we can see that broke the recent high at 1.3050 and tested 1.3100. Now, if the upward movement continues, the target could well become last year's highs. And we're talking then circa 1.3140 down to 1.3120. But there's always a flip side. If a correction does occur, then we may test 1.3040 down to 1.3000. Again, key events are going to be drivers. Thursday, 11:30 GMT plus 3, UK services PMI figures. Thursday, 3 p.m, GMT plus 3, the Jackson Hole Symposium. And at 4:30 GMT plus 3 on Thursday, we have US manufacturing PMI data. There's a lot that could affect the markets over the next few days. Could get a little bit whippy, so don't forget your risk management techniques. Thirdly, we're going to take a look at Brent crude oil, and the price dropped more than 3.5% in 2 days at the start of the week. As the chart shows us last Friday, the price opened at $80.28 per barrel and closed at $77.27 per barrel on Monday. In fact, it slid further since then at around $76 per barrel early Thursday morning. Bearish sentiment has been influenced by geopolitical factors, as is quite often the case at the moment, and particularly easing of Middle East tensions. It's being reported that the Israeli Prime Minister Netanyahu has accepted a proposal aimed at resolving the disagreements, interesting use of word there perhaps, or the tensions between Israel and Hamas. On top of this, we have ANZ bank analysts pointing to reduction in petrol consumption in China due to the increasing use of electric vehicles there. As we know, China, a huge market growth for electric vehicles. That looks like it's having a potential knock-on for oil. Well, can the price fall further? Well, the chart indicates the price is approaching a key support level that you can see in yellow. Now, that dates back to 2023, and this raises concerns, especially given some bearish indicators. Take a look there. We've got the recovery from B to C has retraced approximately 50% of the A to B downward impulse. Formation of peak C has seen false bullish breakouts of previous local highs, and the bearish candles that were formulated on Friday and Monday have broad bodies and closed near their lows, which indicates a lack of demand. Thus, it's possible to think that the bears may attempt to breach the critical support level, potentially leading to a new low for the month of August by the end of this month. So again, it could be quite choppy. Mainstream news, figures, etc. all contribute to oil at the moment, so keep your eyes and your ears open. Okay, and we're going to finish off this week by looking at another commodity with quite a contrasting situation compared to Brent crude we were talking about, and that's gold. And gold has broken and surpassed $2,500 per troy ounce for the first time. Just over a week ago, we noted bullish sentiment in the gold market. The price was moving within the ascending channel that you can see in blue, and we said that bulls may attempt to set a historic record amid a release of economic news and data. Let's take a look at the chart from earlier this week, and we can see the price above the psychological level of $2,500 per troy ounce. That's influenced heavily by last week's news, and in particular the news indicating a Fed rate cut in September. As I mentioned just before in the previous video, there is talk that it possibly could be a 0.5% cut instead of the expected 0.25%. On top of that, everybody is looking for important signals coming out of the Jackson Hole Symposium for gold as well as for currencies. Now, currently Thursday morning or early Thursday morning, gold trading around $2,498 per troy ounce, are still hovering around that important psychological level of $2,500. Take another look at the chart. Now, that shows that we continue to move within the ascending channel, and it's worth noting the two historical records set this year in May and July, and in both cases the price encountered resistance at the upper boundary of the channel, and the RSI entered the overbought zone. Now, a rise above the previous peaks on each occasion was minimal, and a subsequent decline to the median line of the blue channel followed, and that's shown by the arrows that you can see. It is of course possible that a similar pattern could repeat for a third time now, and then considering that the $2,500 psychological level may well act in favour of the bears, and we saw similar false breakouts but in reverse were observed at the $2,300 level back in June of this year. So a little bit of uncertainty, but certainly getting above that $2,500 level is major news. Keep your ears and your eyes open. Listen for comments from the Jackson Hole Symposium. They could well help figure out which way you think the market is going to move coming in the next few days. We wish you luck with your trading for the week ahead. Bye for now.